fire now is closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. And BTC got that rejection off of the liquidity end that dropped to the downside. We were expecting a little bit of a retrace, but they got a full-on rejection from 30K all the way down to the 29.7 region, and it looks like we might come down to reclaim that wick in its entirety rather than just having a wick to the upside off of that liquidity. We caught that bounce earlier, set the stops in the profit after trimming, and caught that. We did not catch the short, but we did call the retrace at the top there. Let's go take a look at the liquidity of high block capital. What is high block? Well, it's when people lock their liquidity in the charts to get burned to a crisp by the market maker. We get to see where those stop losses and crispy characters lie in wait. Let's go into the 1 minute time frame. So The thing that caused me to long was I wasn't seeing that many longs pinged in here, and I was seeing this crispy character up at 30,603, at least a retrace into some of the liquidity above, like here at 30,330. That's where I considered taking my profits earlier today, and then I set my stop in a profit and got kicked out in profit. So it was a win either way. So yeah, it looks like these guys got this $198 million 50x pool got liquidated in the shorts.
Fatality.
And that's what happens, is they scare out the shorts and they go up to go down. And these 100x pools of longs that piled on here got liquidated. And now it looks like they are opening up a huge fervor of shorts, 122 million up here at 30,698, which coincides with this little character which they still have yet to reclaim, and all of the 50x and 100x characters that were pinged in off this drop here. So it looks like they could be coming up into the middle of the vector candle here to reclaim some of the 100xers here at the 29,944 region and recover some of this fair value gap. They already got the 122 million 100x pool here without hesitation. And are they going to come back to this 100x pool, which is still in profit? That could be the case, as we see a bounce which could lead to a further B wave to the downside. A, B, and C your way down lower to that 29.2. So we are chilling on the sidelines right now, just waiting for that sweet spot. So let's expand our vision to the higher time frame external pools to see what lies in wait. Let's go to the 7-day. Shout out to everyone here. What's up? What's up? So as we look at the 7-day time frame, we are starting to see some more shorts getting pinged in here up in the 31.4 region, and from 30,005 realistically up to 31.4, getting kind of juicy, but still single digits of billions down here. If we go to the higher time frame, you'll see where this could be getting interesting. We have the 29.2 character that we talked about, which is the 90 billion on the 2-year time frame. Let's go expand our vision to the higher time frame to see where that lies. As it stands currently, we do have a squeeze idea percolating on the radar for a juicy long if we do see some lows swept at 29.2 and knocking out all of the longs. Let's go ahead and expand our vision to the 1-month time frame. 1-month time frame does have more liquidity below, suggesting a 20 billion cash grab at 29.3, and their partner in crime at 20 billion at 29.2, and you got near 20 billion at 29.1. So some of this little bit of happiness, they could come sweep out here and spawn some divergence off of those carcasses on the 1 month. So the 1 month time frame does have an imbalance to the downside, suggesting we retrace into this. So before you just pile on a long full portfolio at 29.2, just consider that this could be an entire Bart Simpson down to the 24K region. So we need to see some divergence and other confirmation keys too. Once again, on the 6-month time frame, you do have these large pools percolating sub 25k that we could come back to at some stage, so please be on the lookout for that. Don't be ultra bullish or bearish, either way, just look at the pools shifting. We are seeing this narrative idea of 142 billion at 24.6, 175 billion at 24.3 on the 6-month time frame. If we expand our vision to the we didn't see the 6-month pool at 29.2. What is it valued at? So if we go down here at 29.1, we have 53 billion at 29.1 on the 6-month. If we go to the 2-year time frame, that amount is valued at the 29.2 region. So you got that. 29.2 looks to have been taken off the table with this previous drop to the downside here on the this 96 billion seems to have been wiped off the table. That must have been earlier today, actually. Was it? no, the 18th, so that was like 3 days ago. So interesting that 96 billion on the 2029-2 region on the 2-year was wiped clean. It looks like we're dealing with, before we go back there, the higher time frame we're looking at is this 197 billion at 33.2, 166 billion at 32.8, and 175 billion at 32.4. So coming back into this region to take out some of these longs would be, these shorts would be something to think about once we sweep these lows of some nature. If we start to maintain that bullish narrative going up into those regions on this highest time frame could be in order. Something to note is that we do have $241 billion at 24.4 that they could easily Bart Simpson down to and grab as well if the narrative suggests that retrace. Let's go to the 1 month time frame. So don't get bull trapped on these, on the hopium of something that could occur here. Always keep a very serious tonality that this does not have to do anything at this level, necessarily speaking. We are also looking back in time. Let's go to the 3 month time frame and show you how it doesn't always play out exactly. Actually, the 6 month. Where was that? So over here we did have more liquidity to come down to at the 24.6 when we were bottoming out, and even as this was rounding out and we were seeing all our oscillators in that ideal position, we always had an open mind that it could come down to these pools because there was more liquidity down here. So just because there's more liquidity down here, does that mean they come down to it? There's a chance that they could come down to this $178 billion at 24.3 and just Bart Simpson their way down. So always keep that in mind when thinking to go long at these levels. Alright, let's go back to the monthly and then throw on our fibs and oscillators and look out some extension tools. Looks like we're at the 29.74 region. Let's look at the liquidation levels here. Zoom in. So they're pinging in a little bit longs here that they're kind of coming back to perhaps after pausing for a moment. We're going to see how this hourly candle closes. Let's go into the Binance chart. So earlier today, what made me get into a long, let's just go over it. Even though there was no divergence or anything, I was just seeing the cloud shift and I was like, you know what, I'm gonna just do this. So here we go. Let's go throw on our oscillators, heads up display on. Link in the description for more, momentummaster.info. Scroll down to features, toggle all of the indicators that you would like to see in the suite or each component as we go over them, as we're about to go over the trend cloud. So we're starting to see the shift in the trend cloud here on the hourly. So when we were about just about going into work, as we were coming down here, I was like, I'm gonna consider going long at the 29.9 region, and I went there because I was seeing the thinning cloud just after the live. We did not come to my level, but I was just like, you know what, I'm willing to see what happens here because I had to go to work. And then sure enough, it bounced off the cloud and continued, and this is what you want to see on Momentum Master, is you see these bounces off of the cloud idea. You see the thinning of the cloud and then the bounce off the cloud confirmation, and boom. And that would have been an easy hourly scalp, and we did that while we were teaching for a cool 1.54%, and it went to our level, and I just at 30,300 just decided to close it a proportion of 75%, set the stop loss, and profit got knocked out. I did expect to retrace to 30k at the bare minimum. I got knocked out at 29, what was it, 29,950 or something like that, somewhere down here. So I was like $4 in profit with the last 25% runner. So that is what you can use as a tool, as a gauge. That cloud idea was the thing that took me to the promised land today. Even though this meandering around on the stochastic and the Williams, you did have a shoulder, head and shoulder on Williams. The Williams does give you cleaner patterns to look at. So if you're trying to find shoulder, head and shoulder here, you can find it on the Williams too, because they are reflections. The Williams is a reflection of price action, whereas the stochastic RSI is a reflection of the RSI. So looking here for some patterns and double bottoms, that's why we talk about the fertile crescent idea on the Williams, is because it does end up playing out in terms of those double bottom pattern ideas and double tops and so on and so forth. So as it stands right now, we are retracing into this impulse, this change of character, break of structure, whatever you want to call it. Previously we were coming back to some golden pocket ideas. Currently we're coming to those golden pocket as well. This looks like it could be a fake out bounce though, so please keep that in mind. I'm not longing here. This, after a huge move like this to the downside, you're not going to get, most likely not going to get a immediate rise up. If anything, you come up to these pools up here. This is the 29.972. This is a fair value gap on the 1 minute, I believe. Yeah, that's this 1 minute candle to the downside here, 29.972. So if we come up and come to that 29.972 region and then get sold off into that, you know that it's most likely we're going lower. It's all about how the hourly time frame candle closes, so be aware of how that candle closes on the hourly. So let's make our narrative and start to go lower and see how our oscillators have reset, as we did not have time to stick around for the 9 o'clock session in Asia when we gave our update this morning. All right, so it looks like we have this huge wick to the downside. If we do a retracement in the direction it's going, whoops, not that one. If we do a regular retracement in the direction it's going, and we put it on as basic, as it stands right now beneath the 29.993 region, we are getting a shooting star idea, objectively speaking, beneath the 382. Putting the body within that wick is a objective shooting star. As it stands right now on the daily, we have a shooting star that if it closes anywhere in this region, that it is a bearish sentiment set into motion on the daily time frame. This cross down event, which we had for you on July 2nd, has been treating us nicely with rejections off the baselines ever since. So until you start sculpting out where this comes beneath the candle as the candles close above it, this cross down event on the daily is still in play. As we see the Williams coming down here, it's getting into the oversold region, but it has not rounded out with that double bottom we like to see. Although on the daily time frame they haven't given it much in this bull market. You get one little scooperoo on the daily most times and you're out of here, and you're out of here, and you're out of here. So we're lucky if we get that double bottom goodness on the daily time frame. So Williams, stochastic RSI is oversold, and the previous money flow that we were seeing a surge up on did see itself to fruition off the cloud bounce here that we took as a long scalp today. Little baby scalp, as baby long as I called it. If we look at the money flow on the 22 hour, looks like it's going to be suppressed by the Williams coming down more. It'd be nice to see the Williams come down into regions such as this, where it's in the near complete oversold region. The last time we got there was in the 19K retrace to the 618 here on the the Silicon Valley Bank liquidation event, and this is the 22-hour time frame. We got that Adam and Eve double bottom idea here, and then we surged out. So are we going to see a similar play where we try to get this double bottom happening on the Williams on the 22-hour time frame? Has also been suppressing you with that cross down event in very clean, even if you're getting those wick whacks and up and down price action on the hourly and the 15 and all that stuff. it's been pretty smooth sailing with the baseline rejections of these time frames. On the 22, you're getting a large amount of volume here on this sell-off candle as well. If we go to the 12-hour time frame, 12-hour had beginnings of a cross up, now starting to flirt with the idea of a cross down event, with the baselines being ever so tight in that region. The money flow is coming beneath the RSI in a massive way here, so whatever sweep you do get, you might see this bounce up. The Williams is also getting in that oversold sweet spot. So we have about 7 hours. This is putting us towards the daily candle close for that time. Friday is run for profit Friday, so are we going to see a run for profit to the upside or a Bart Simpson to the downside? That is the question. As it stands on the 6-hour time frame, we're getting fatigued on the 6-hour stochastic while going essentially sideways and actually lower if you ignore where the candle went and where it actually is. So we were seeing this double bottom formation with the rising sun that is now getting rejected at the 50 level, so we could come back down again on the 6-hour time frame. That was one of the insinuations off the cloud that I took for this, was the rise of the potential suppression of the 4-hour with the 6-hour rising sun, which has now been negated. So if we look at the 4-hour, this is where I was looking to long, even though this 4-hour was overbought for that long scalp. I was saying, well, the hourly could take you up, as well as the 6-hour suppression of the reset of the 4-hour. But now as it stands, it looks like the 4-hour wants to come down pretty hardcore on you, and you're seeing the cloud. Interesting to note is the cloud is curving and thinning here, and you still have the cross up of the baseline in play, although the candle would have to see some massive move up above 29.9 and close there for it to even start to reclaim this baseline cross up event on the 4-hour. And with the cloud suppression and the stochastic possibly dumping, you could see the 4-hour start to close some nasty candles here in 3 hours and 20 minutes. Hourly is getting oversold, and the money flow is above the RSI, suggesting some more downside. And as it stands right now, in the last 20 minutes of this candle, you could be getting a bearish candle as well on the hourly. I'm on my last little bit of steam for the day. I've been up since 6 a.m. doing this hardcore while I got ready to teach a bunch of lessons. So I'm a little bit out of gas, if I'm being honest. But the price action calls me and beckons me to that juicy entry possibly coming. So we are seeing this possible ABC to the downside yet again. ABC come down to that 29.2. And what can you see from that bearish trend based fib extension level? We could take it from the top, take it to the bottom, and this 29.710 will take you to that one level. That profit one level will take you to that 29.2 region. Look for a 29.710 to fail. 29.710 needs to fail before there is a truth to this. You're starting to round out the 15-minute, so this could surge up upwards of this level at the 29.967 region before coming down to this region. As it stands right now, though, the hourly time frame is oversold, and the 4-hour is the thing that could be taking you to this region. If we come to the 29.2, this would also be a wick over here of a fair value gap on this candle. So this entire candle's fair value gap that was previously reclaimed to that point at 29.5 would be reclaimed to 29.2. So there is confluence to come to this region on the 29.2 region, where we already talked about that on the liquidity as well. And as it stands currently, you have the hourly baseline cross down event coming to suppress you, and you're not scooping it up beneath the price just yet. So even if we went sideways, it would take a while for this baseline to come around, at least 4 to 6 hours. So do we see a few hours of a push up and rejection down to this level? Probability is saying that we can go lower and try to induce some longs in the process. cloud is pretty thick on the 5 minute. We kind of jumped the gun, went a little bit lower time frame. Let's go back to the 15 really quick. 15, yeah, attempting to do that rounding up, scooping of the price with the baselines closing beneath the price action here. If you start to see that, you could see a 15-minute scalp continuation up here, A, B, C, up to this B on this mini wave, kind of like boom, 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 like, you know, patterns within patterns kind of thing. So you could be seeing something like that before you go down to here. This would put you in the morning hours for me, 5 a.m. So you could be coming up to this region to take out some of the liquidity at 29,972. Let's see, that's a fair value gap. What's up at 29,972? Let's go see. 21,944, it has that 36 billion. 29,946 has 92 billion. So there is a stacked liquidity pool up in this region that they could come back to and ultimately fatigue if it is bearish, and that would also coincide with the fair value gap we showed on the 1 minute. So are we going to come up into these regions and then get that rejection down to the bearish trend base fib level? So if we take a look at this, let's make sure it's more precise. There you go. And that's where the dump started to happen. So you have impulse retrace on the trend base bearish fib extension level with the 236.29717 confirmation level. Once you break beneath that, then the short could get very volatile to the downside. We have yet to also bounce off the 706.886 here, so you could get some sort of reaction on the deep retrace of that impulse here. And if we take a look at the retracement here, just off of this impulse, the 618 also coincides with the daily close level at 30,025. So you could wick all the way upwards in that region after liquidity up to 30,025. Let's see what's up at 30,025. 30,007 has this pool up above here, so you could come up into the $101 million up here at 30,073. Just slightly above that, that would be upwards in the 0.66 up here in this region. So you could bounce only to go down further. So be wary if you do take that 15-minute hourly play out of here. There's a larger pressure of this recovery of this fair value gap that could be taking you down further. So I will be chilling, not looking for a long here. I don't think it's going to be as easy as the V-shaped recovery that was out of here. They're going to play with the liquidity induction technique first and try to take them a little bit lower and bring about less long payments. And that's my story, and I'm sticking to it, folks. I think we got it in a good zone. The hourly is oversold. 15 minutes starting to round out to a play here, so you could get that 15-minute cascade up to here. You watch to see where the liquidity is and what longs get pinged in here. As it stands, there is more potential pools to retrace into right now. But if you look at the external liquidity they may be aiming at, they could be coming down to that 29.2. So we'll be waiting for a long based off some divergence or something. Currently not seeing anything of note other than this is getting to an oversold status on the 15. So we got 12 minutes on this hourly candle close. I don't think I can be with you for 12 more minutes. I'm fading quickly, but this is what you are seeing for the liquidity. We could be seeing if this hourly candle closes in a manner here, reset some of the stochastic and double bottom out of that. It's been a while since we've seen these levels that low on the Williams, not since back here on Saturday, July 15th. Yeah, seeing the double bottom with the rising sun is more of an interesting play on the hourly. This was the one we were talking about that was pretty spicy looking in terms of having the money flow beneath the RSI, having that Adam and Eve kind of double bottom with the oversold region with the rising sun, and that was what you would have wanted to see to take as a huge scalp to the upside. Okay, so as it stands right now, are we going to head a little bit lower? I'd like to see this Williams start to round out in the green like it did back there for a juicier long play. So we are currently idle and waiting for some levels and some divergence to play out off some liquidations. And we talked about that 29.2 region being a higher time frame point of interest too. So having this confluence is interesting to see. Which came first, the confluence or the liquidity, or both being induced into the math? Alright, ladies and gents, that's my story and I'm sticking to it. We're going to see this 15-minute possibly try to do its thing, and then we watch to see how that hourly candle rejects. As it stands right now, you're getting a huge rejection on the hourly time frame, but if you start to come up and this hourly candle starts to sell off into it, you could be seeing some closes lower. Alright, so we're going to leave it there for the time being, and we will catch you on the flip side. So once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip